Hey, good morning. Welcome to the morning brief. Today is Friday, April 5th. So, what's on the docket today? Well, news wise, we had some wicked numbers. We had average hourly earnings, which were as expected, but non farm employment change was way better than expected. So, this means that the employment situation is still extremely bullish. This is not good for interest rates. Interest rates will be on hold, and this actually suggests that there may be an argument to raise rates again. So while that's not on the table right now, definitely keeping rates as they are is warranted based on that hot employment number. The unemployment rate actually fell from 3.9 to 3.8%. So again, market does not like that because that means that the Federal Reserve will probably not be lowering interest rates anytime soon. Looking at the daily chart here, you can see we had that big day yesterday, and we had a volume spike that is above normal, so that's concerning. We are gapping up slightly this morning, but when you see this kind of action where we close on the low or very, very near the low, it does not bode well for the next day. So we may be gapping up here now, but that is not what I expect. I expect us to continue to go down. Yesterday, we saw some really, really ugly selling. And yeah, so is what it is. Moving on, looking at the 60-minute here for the inventory. So wow, what an ugly looking day that was. But let's take a look at the inventory. So while this was going up, smart money was getting out. Big divergence there. And then finally, once we even after we started turning over, then all the bargain hunters come in. So you got this big spike in inventory on this big spike down. That is not right. So what that is market is selling off heavy, but inventory is increasing. So there's a huge divergence here. On the day, actually, we ended up with a negative inventory number of about 562, but on such a big, big sell-off, this is divergence. This is bottom feeders. This is buy the dip folks that are stepping in here and buying all the way down. Now, until that buy the dip folks get burnt, and they will, we are going to continue to be in an uptrend. So even though we had a bad down day, long term, still in an uptrend. But if these people bail out, when the buy the dip people bail out, it is one ugly boom to the downside. So we need to be aware of what's going on here. And what's going on is a lot of people are stepping up and buying into this. But what happens when it doesn't go up? Those people are going to bail out, and it's going to be really, really ugly. All right, intraday, what do we got going on? Overnight action, about 28 points. That is above average. So volatility is a little bit more than average. Not surprising after yesterday. Where do we have support and resistance? You can see we've got some resistance down here at 51. I should say support. Support at 51.93. I'm going to say 51.80, 51.60, 51.43. I'm only going to go down a little bit farther because the range has been so big. 51.20. So where do we have resistance on the top side? We've got some resistance around 52.20, 52.25, 52, what's that? 52.45. Nice confluence at 64.50. Another band up around 52, I'm going to say 52.90-ish. So there are some, as well as 5,300 overhead resistance. Stock Trader's Almanac for today is negative 42.9. So only a 42.9% chance the market will be up, which means that there is a 57.1% chance the market will be down. So historics are not helping this market out at all. Possibly a down day. That's it. That's all I've got for you. Have a great weekend. See you Monday. Remember to Subscribe, number one, comment, and like. See you guys. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.